Welcome back. Most Asian stock markets were higher at the close this morning. The Nikkei in Japan 0.25% higher. The Hang Seng a tad firmer. However, the Shanghai index in China is slipping 0.33% to 3,318. Let's look at what happened over in the United States yesterday. Of course, their markets haven't opened again. Stocks ended lower on Wednesday after minutes from the Fed Reserve's March policy meeting revealed concern among several members of the committee regarding the regional bank liquidity crisis. The minutes followed a cooler than expected inflation report. All three major U.S. stock indices seesawed throughout the session to close in negative territory. The S&P 500 lost nearly 0.5%. The Nasdaq Composite Index losing 0.85%, and the Dow Jones Industrial fell just 0.1%. All right, the Johannesburg Stock Exchange is following the trend set by Asian markets this morning, currently up more than 0.5%. And you'll see the rand behind me essentially showing rising against the dollar. That means, in fact, falling rather against the dollar. That means a stronger currency today. It opened at the close at around 18.14. And there you can see where it is at 11 o'clock trading at around 18 Rand 22. Emerging markets are doing well overall, partly because the dollar itself has hit 2-month lows on bets that the U.S. Federal Reserve may stop hiking general interest rates. The U.S. Central Bank has been hiking rates aggressively over the past year to deal with the rising cost of living. But consumer inflation data released for March yesterday in the U.S. showed that those prices rose less than expected. So that's seemingly good news, but there are some implications here. To discuss this further, we're joined by the CIO at Ashburton Investments. That's Patrice Rousseau. Thank you, Mr. Rousseau. How are you today? Thank you for being with us. And let me start by asking, this is all about the U.S. Fed Reserve. Based on the data that you've seen coming out, are you expecting the bank to raise interest rates in May? That is the question. Or could the hiking cycle actually be over?
Good afternoon to you and to your viewers. Yeah, we are on a knife edge. The data that was released yesterday was slightly better at 5% in terms of inflation. So we expect maybe the Federal Reserve members to look at more data releases and decide what they're going to do accordingly. So it's on a knife edge. I would say it's a 50-50 chance whether they're going to hike 25 basis points or pause.
All right, 50-50. How good was the inflation data? Actually, the rise in the cost of living less than expected, but apparently core inflation, excluding food and energy, still relatively high.
Yeah, so the headline numbers come down to 5%. It was expected to be 5.1. If we exclude the more cyclical elements like energy, as you mentioned, that's 5.6, which is quite high compared to the target of 2%. So it's moving in the right direction, but still high compared to the Fed's target. But the Fed will be forward-looking because interest rates hike take 9 to 12 months to take action. So hiking now will only have a delayed effect. So they might decide that they've done enough. They've done close to 4.5% of hikes over the last year. They might decide that they've done enough and the economy is slowing by itself and they don't require further rate hikes.
And of course, there's some relief because the fear has always been that if rate hikes come too thick and fast, the economy will suffer and we could in fact see a global recession. The Fed's own minutes apparently still talking of the possibility of a mild recession. How high on the agenda or how big is the possibility of a global recession still?
Yeah, I mean, the Fed would have had a fright from the U.S. regional bank wobble. So we would look at the impact of the tightening of interest rates on the broader economy. They also have been reassured that the economy has been quite strong, but they wouldn't want areas like the housing market or the commercial real estate market to fall apart, because these are huge employers. And so far, they've done a good job to try to quell inflation, but it hasn't really had a massive impact or an impact at all on the job market in the US. So they're hoping that inflation will start to roll over without causing too much damage in terms of jobs or even the banking market or bad debts and the like going forward.
All right, we all hope. Let's bring this closer to home. The rand has strengthened. We look at that. Presumably, that's all because the dollar is weak, because we're still in stage 6, rolling blackouts. We're still looking at a local economy that's stagnating.
Yeah, it's all about the dollar. We see the euro has firmed to 110 to the dollar, so the rand also has strengthened by 20 cents overnight. So, and maybe there's some also positive sentiment from the annual investment conference. You referred earlier in your bulletin to the 2 trillion 5-year target in infra. So there's generally good sentiment towards emerging market, but it's the dollar weakness which is leading to stronger rand and also strengthening commodities across the board.
I'm glad you mentioned the investment conference. I mean, could any announcement actually move the rand? Could it be significant later today?
Yeah, I guess the market has been anxious about the situation with Eskom. I don't think there's been anything new released so far from what you've been reporting, but anything which would show or any intent to increase investment and try to get growth going would be positive. Already we've seen, unfortunately, mining production fall 5% year on year in Feb. That's 13 negative readings. So we need the economy to kickstart so that growth can come back and employment rise. And any measures the government can take to attract investment will help that.
All right, final question. Locally, we're expecting gold production, mining data later on today. Anything there you'll be looking at? Anything else that you're following at the moment?
Yeah, I think really everyone's eyes are on global data releases rather than local. Maybe there might be something coming out later from the investment conference, but so far the data releases we've seen, economic data out of Europe, is quite positive in terms of industrial production, for instance, ahead of target. So that will buoy sentiment positively towards emerging markets and South Africa, I would say. So far, we're getting a bit of tailwind from the broader global sentiment.
All right, well, long may it last. Thank you very much. CIO at Ashburton Investments, Patrice Rousseau. Let's take a short break and then we'll come back and wrap up On Point. Thank you for being with us.